but you can China's data comes out faster than Statistics Malaysia's data. You can see that this level is now at a new record. It's heartening to see that, but the bigger question is, can we depend on this source of growth for Malaysia? Can we keep depending on growing our exports to China as a way of keeping funds flowing into the country, liquidity flowing into the country? Well, there's no question about it. Malaysia is one of the big beneficiaries, you can see, of China's stimulus spending. Our exports to China in December of 2009, 105% up year on year, compared to even Korea, great exporting nation, 67.5% up. Indonesia and Malaysia seems to be taking the pole positions in growth of exports to China. That means China is basically sucking in raw materials imports. Malaysia and Indonesia are producers of commodities. So commodity producing countries, Australia, Malaysia and Indonesia are the biggest beneficiaries of this spell of stimulating growth that China is going through right now. Okay? So the question that I'll try to answer later is, can we depend on this source of keeping our growth afloat? This is more statistics on growth of exports in the region. Malaysia in November, barely growing at all. China, Singapore, Thailand, Korea and Taiwan are the countries that report their trade data earlier. So we've got just 4 countries for December, and the growth seems to return to fairly strong positive levels, more than double-digit growth. In the case of Taiwan, as high as almost 47% year on year. Much of this comes from a low base, because some of these countries that reported strong data, their base here for exports to China and to the rest of the world was at the low in the month of December. So year on year looks like a fantastic jump. That's mainly because of the low base for comparison. Okay? So don't be too heartened by this nice jump in export statistics. In fact, in December, you can expect Malaysia's growth to be very strong levels, at very strong year-on-year growth levels. It's comparable to what perhaps South Korea has achieved. Where is this growth in exports coming from? It's coming from electronics, partly. Some of you may wonder, how is it that Malaysia still exports a lot of electronics? We do, because the electronics companies have China plus 1 or China plus 2 policy for their production platforms. They will not confine their production base to just China. Although China is very cheap as a production base, they will not do that, because if anything happens in China, the production capacity falls to zero. If, say, I think a couple of years ago that happened in Taiwan, a lot of the manufacturing is done in Taiwan, and at the moment there's an earthquake in Taiwan. What if the roads are disrupted, the highways collapse? Nothing can get out of Taiwan. So that is a problem. So all the multinationals do not confine their manufacturing to just one country. They will spread it out. So Malaysia does benefit from a recovery in the electronic sector. You can see Asia is leading the growth in electronics. There is recovery in Japan, the US as well, but less so in Europe. You can see recovery over here. It is taking place, but you can see the strongest growth almost reaching levels just before the crisis. That is happening in Asia. Recovery is very strong. Electronics, in the electronics industry, and that's showing up in the book-to-bill ratio. For some of you who are in the industry, you can see the book-to-bill ratio stands at above 1. That means the industry is growing again. It's been growing quite strongly. 1.2, times is a level where most electronics companies make good money. That's why some of you who have bought perhaps Unisem, MPI, or even Panther Master would have probably benefited greatly. So this is something worthwhile looking at. You can continue to track this through the Semiconductor Industry Association's website, semi.org. This book-to-bill ratio gives you a very good idea about the trends in strength or weakness in the industry. So the picture for exports out of Malaysia looks to be quite strong on account of electronics. But if we look at just the US, coming back to the US, the growth is not great. Some people think that the fourth quarter growth may be much stronger than the consensus estimates. At the current rate, the US consensus estimates for US growth in the fourth quarter is about 3%. Some people think it's as high as about 5% or something. But that's still very weak compared to the normal first quarter of positive growth or second quarter positive growth. Typically in the US, after a recession, the first few quarters of growth is very strong. It swings into very high positive numbers. You can see this from the plot of the US GDP growth numbers, typically after a recession. You can see that after a recession, it goes into 5-6%. It did that in 1990. In the year 2002, after the tech bubble recession, it went as high as 8%. This round, there has been a recovery in the US for GDP growth, 2.2%. Very weak first quarter of positive growth. So it might go back into 4-5%, this kind of level in the fourth quarter. In third quarter, it's just 2.2. It could go to 4%, or maybe more than that in the fourth quarter. But the consensus estimate, which I displayed just now, this figure, 2.9, reflects the fact that most people expect, most economists are not very optimistic about growth prospects in the US. There's been a term that's coined for this. It's called a new normal, which means it's not going to be like before. The new normal is 2 to 3% growth for the US. We won't see 4-5% growth anymore in the expansion phases of the period past recession. So the reasons for this is, of course, I'll spell out in the following slides. But just for the moment, dwell on this. As usual, we can see every time after a US recession, there tends to be a bull market. It can extend for many years. This kind of a prospect has lured back out of retirement some of the biggest fund managers around. I know of several well-known international fund managers who had gone into retirement in the last few years, maybe 2006 to 2007, and then in 2009 they came back out of retirement. Why? It was too exciting to miss. Why? Because we have a possibility of this multi-year bull runs that typically follows after the end of a US recession. So this is a period that we're looking forward to. After a bull run from the recovery, typically can go on for years after that into very strong bull runs. So for those of you who subscribe to this view, I'm in this camp. I tend to believe that for many years after a bull run, after a US recession, markets tend to be an upswing. You can see that in the year 1990, after the 1991 US recession, we had a bull run in 1993, extending all the way to 1997. So the same thing happened after the tech bubble recession that ended in late 2001. After that, stock markets gradually moved up and culminated in the bull market of 2007. So we could be in for something similar, a multi